When we talk about the US dollar, right? I'm continuing to be very, very bullish on the USD. And I'm going to start from the very, very high time frames, the monthly month, and I'm going to come back down in time frames. Well, to show you my thought process on where I'm looking for buys, right? So this is the monthly chart on the DXY. DXY is, of course, the US dollar currency index, I'm sorry. And what I'm thinking about this breakout on the monthly, this is the monthly candle, right? April's monthly candle. This hasn't closed yet, right? But what I'm thinking about this is the continuation above September 2019 highs, right? Now, should the DXY or the US dollar remain bullish as we are seeing or as we have been trading it from these lows around May 2021. It's pretty cool because we're going to have a nice 3% range uh, to make money or to profit from longs on the USD from September 2019 highs, targeting, of course, on the midterm March 2020 highs. But the cool thing about this chart is this that I'm also looking for the continuation to the upside. Remember that we are seeing more and more hawkish language out of the Federal Reserve. Hike rates are coming this year, etc. This is very, very bullish for the currency. And of course, we have, but technically speaking, we do have some very, very strong levels to the upside. Now, first targets will be March 2020 highs, of course, in confluence with these highs, which are October 2016 highs. And then we do have this massive key level, which are May 1989 highs and this previous base. I'm looking at the higher time frames because I am looking for long-term longs on the USD. Now, if we go to the 12-hour chart, right? This is a 12-hour chart on the DXY. We are looking at a very, very nice bullish structure. And as you can see, September 2019 highs are also March highs, right? This candle, well, price broke with this massive level. Now buyers were unable to break all throughout March with the 19,936 level, give or take, right? But eventually we broke to the upside, right? This is not a level that I wish that I would look for buys on the USD. Now, what I'm looking for is a retest of these highs, right? Of September 2019 highs, which are also March 2022 highs. Now, what I'm looking at here, technically speaking, on the 4-hour chart is this massive push to the upside. Remember that support and resistance um, zones are actually zones, not straight lines. So I could have missed the boat on this move. Now, it doesn't matter, right? If we go back to the 12-hour chart, this structure is a very, very clean. So we could, in fact, have a push to the upside to retest this structure, right? Before I could look for deep buys on the USD. Now, what would happen if the DXY breaks with this with the September 2019 highs? Would I turn bearish on the US dollar? Hell no. Of course not. Of course, I would not turn bearish for the USD. Now, my next buy zone, and to be completely and utterly honest with you, this is my preferred buy zone on the USD, looking, of course, at price action on the DXY. Why? Because, yeah, I mean, this is a massive, massive level on the very high time frames. And on the lower time frames immediately, which are March, last month's highs, but still I see it a little bit overextended, and I do not like the risk parameters that this possible position would yield. Why? Because, of course, I mean, if the DXY comes back down and rejects this level, I am not going to look for very tight stops because I would definitely get stopped out. And if you notice here on the last move up, there's very few, or actually none, pullbacks, deep pullbacks to look for lows to place stop losses. Of course, I wouldn't trade the DXY per se, but big moves on the US dollar would yield the same moves on the markets that I trade the US dollar on. So my preferred level for buys on the US dollar is actually the 97.80 level or February 2022 highs, which would yield a nice pullback and possible retest of the bottom of this structure, right? This structure has been also very clean in the past, so this is my preferred level for buys. For the first days of next week, I am really not looking for US dollar trades. I'm just going to be watching price action and see, where it lands or if one of my plays actually plays out. The cool thing about deep pullback also towards February highs and January highs is that this is my actual bull bear zone on the short term. Well, not short term, mid term on the DXY, on the US dollar. And I see possible big buy orders placed here, right? This is a very tight, no trade range and bull bear zone, in the sense that if the DXY breaks with this level, there is clean room for further downside continuation, in the sense that I don't see buyers jumping in after the break of the structure and this massive level, big orders placed here. I would be looking for buys all the way down here, but that scenario is far-fetched, right? So, my advice just to stay patient. This is clearly overextended. And a dip towards uh, the 99.40 level or September 2019 highs or last month's highs, right, is risky, uh, in my opinion. So if I definitely see a rejection here, I would trade alongside on the US dollar, but I would aggressively manage that trade because I would still be considering a possible pullback towards this level, which is where I consider big orders uh, to be placed in. I'm sorry that this video came out a little uh, longer than expected, but I believe that should the second scenario play out, we would be looking at very, very, very nice dip buys on the USD for possible swing trades, which will yield a massive profit. So trade safe, be patient.